Understanding the 2026 benefit changes. As we move into 2026, millions of seniors, people with disabilities, and veterans across America will experience meaningful updates to their monthly benefits. These changes are designed to help older adults stay financially stable during a period of rising prices for essentials such as groceries, utilities, transportation, and medical care. The Social Security Administration has officially announced that benefits in 2026 will increase by 2.8% under the annual cost of living adjustment, also called the COLA. While 2.8% may seem modest at first glance, especially compared to the unusually high increases seen a few years ago, it still represents a vital boost for individuals living on a fixed income. For many seniors, every single dollar matters. This increase helps stabilize purchasing power and protects retirees and disabled Americans from losing ground to inflation. It ensures that the benefits they earned during their working years continue to hold value as the economy changes. This update applies to several important programs, including Social Security Retirement, SSI, SSDI, and VA disability compensation. Because it impacts so many groups, nearly every older American or disabled household will notice a difference in their wallets as the new year begins. These changes are automatic, permanent for 2026, and intended to help bridge the growing financial gap for seniors nationwide. How the 2.8% COLA affects your monthly check. The 2.8% COLA increase translates directly into more money in your monthly payment, and understanding how this affects your own situation is essential. For the average Social Security retiree, the increase amounts to about $56 per month. That may not sound dramatic on its own, but when stretched over an entire year, it becomes several $100s of additional income, money that can help cover rising prescription costs, utility bills, or everyday expenses. If your current benefit is around $2,015 per month, that amount will rise to roughly $2,071 starting in January of 2026. This adjustment affects approximately 71 million beneficiaries across the nation, making it one of the largest financial updates for older Americans in the coming year. Importantly, these changes apply not only to retirees but also to individuals receiving survivor benefits and disability benefits under SSDI. All are included in this across-the-board increase. One important detail many people overlook is that COLA increases also affect individuals who receive SSI. In their case, the higher payment arrives earlier than most other programs. SSI recipients will see their increased amount on December 31st of 2025, one full day before the standard schedule changes for the new year. This timing difference helps ensure SSI households begin the new year with the updated benefit already in place, offering a small but meaningful financial cushion. SSI, SSDI, and early payment adjustments. For millions of low-income seniors and disabled adults who depend on supplemental security income, the early release of the updated payment on December 31st is an important detail. This timing happens whenever the first of the month falls on a weekend or holiday, and it ensures that SSI recipients receive their funds without delay. Because SSI is often the primary or only source of income for vulnerable individuals, this earlier deposit can help households start the year with the resources they need. People receiving SSDI will also receive the same 2.8% increase, reflecting the parallel structure of Social Security retirement and disability programs. Those who depend on SSDI typically face additional expenses related to health issues, mobility needs, or supportive care, making even modest increases meaningful. Like other Social Security beneficiaries, SSDI recipients will see the higher payment reflected in their January 2026 deposit. Some individuals receive both Social Security benefits and SSI. In those cases, both benefit amounts will rise and the timing will follow the rules for each program individually. This dual benefit update helps ensure fairness across systems and provides additional support for those who need it most. All adjustments occur automatically. No applications, phone calls, or paperwork are required. This automatic update is an essential safeguard for seniors who may face difficulties navigating complex administrative processes. Working while receiving benefits. New earnings limits. For many older adults, working part-time provides not only extra income but also a sense of purpose and social connection. If you are receiving Social Security benefits but would still like to work, the earnings limit for 2026 will rise. This means you can earn more money before any reduction is applied to your benefits. For people younger than full retirement age, the annual earnings limit will increase to $24,480. If you exceed that amount, Social Security withholds $1 in benefits for every $2 you earn over the limit. For beneficiaries who will reach full retirement age during 2026, the earnings limit is significantly higher, $65,160. In this case, the withholding rate is less strict, $1 for every $3 earned above the limit. Once you reach full retirement age, the earnings limit disappears altogether. You can work as much as you want without any reduction to your Social Security benefits. This system is designed to support seniors who wish to remain active in the workforce while still protecting the long-term structure of Social Security benefits. The rising earnings thresholds also reflect wage growth across the nation and help ensure that individuals can maintain flexible financial choices during retirement. The 2026 taxable maximum and what it means. Another significant update for working Americans is the change to the taxable maximum, the highest amount of annual income subject to Social Security payroll taxes. In 2026, this maximum will rise to $184,500. Workers who earn less than this amount will see no change in their payroll taxes beyond the usual rate. However, individuals earning above this level will pay Social Security taxes only on income up to this limit. This adjustment occurs each year to reflect rising national wages and helps maintain Social Security's financial stability. While the change does not directly affect retirees, it is crucial for the long-term health of the system, ensuring that future benefits remain funded. Higher income workers will notice the increased wage threshold, but this adjustment also means that their future Social Security benefits may increase slightly, since benefit formulas consider lifetime earnings. Understanding the taxable maximum provides insight into how Social Security maintains balance between incoming payroll taxes and outgoing benefits. It also highlights the structure of the program as a shared long-term investment between workers and retirees. Even though retirees may not feel the impact immediately, these wage-based adjustments contribute to sustaining the system for the next generation of beneficiaries. New 2026 tax breaks for seniors age 65 and older. One of the most encouraging updates for older adults in 2026 is the introduction of a new tax deduction aimed specifically at individuals age 65 and older. This new provision allows qualifying seniors to reduce their taxable income by up to $6,000. This change could significantly lower or even eliminate taxes on Social Security benefits for many households. To qualify, single taxpayers must have a modified adjusted gross income of $75,000 or less, while married couples filing jointly must remain at or below $150,000. Many older Americans fall well within this range, meaning they could benefit substantially from the new deduction. This is especially helpful for seniors who rely heavily on Social Security income or who live on fixed retirement savings. Because tax rules can be complicated, beneficiaries are encouraged to speak with a tax professional or trusted advisor to understand how these new deductions will affect their personal situation. The goal of the new tax break is to ensure that older adults retain more of their limited income and experience less financial stress during retirement. For many households, this update will provide real relief and a noticeable improvement in disposable income throughout the upcoming year. Understanding VA disability increases for 2026. Veterans receiving disability compensation from the Department of Veterans Affairs will also benefit from the 2.8% COLA increase. The VA aligns its annual adjustment with Social Security to maintain consistency across federal benefit programs. While the effective date for VA rate changes is December 1st of 2025, the first actual payment with the updated amount will arrive on January 1st, 2026. For veterans with a 100% disability rating, the increase represents a meaningful rise in monthly income. For example, a veteran currently receiving approximately $3,831 per month will see their payment grow to around $3,935. Veterans with lower disability ratings will still receive the 2.8% adjustment, though the exact increase varies by rating level. An important advantage for veterans is that VA disability payments are completely tax-free at both the federal level and in most states. This means the full amount of the increase stays in the veteran's pocket without any reductions. Veterans who receive additional benefits for dependents, such as a spouse, children, or dependent parents, will also see those amounts rise under the new COLA. This update helps honor the ongoing needs of those who served and ensures that disability compensation keeps pace with rising living costs. Payment schedules for Social Security, SSI, and VA. Understanding when your benefits arrive is essential for planning monthly expenses. Social Security payments follow a birth date-based schedule. If your birthday falls between the 1st and 10th of the month, you receive your payment on the second Wednesday. Birthdays between the 11th and 20th correspond to the third Wednesday, while birthdays between the 21st and 31st correlate with the fourth Wednesday. Individuals who began receiving Social Security before May of 1997 follow a different schedule, receiving their payment on the third of every month. The same applies to individuals who receive both Social Security and SSI. SSI payments are generally issued on the first of each month. However, if that date is a weekend or holiday, payments are issued on the last business day before the first. VA disability payments arrive on the first business day of each month, and your January deposit reflects your disability compensation for the month of December. This schedule can be confusing, but what matters most is that you can depend on consistent monthly arrival of funds. Understanding these dates helps seniors and veterans plan for rent, medication, insurance premiums, or other essential costs without unnecessary stress. The importance of a My Social Security or VA online account. Both the Social Security Administration and the Department of Veterans Affairs encourage beneficiaries to create online accounts, which offer faster access to important information. A My Social Security account allows you to view your COLA notice, check your benefit amount, review your payment history, and request replacement documents such as an SSA 1099 for tax purposes. These features can save valuable time and reduce the need to call or visit a local office. Beneficiaries who set up their online account before mid-November will typically receive access to their COLA notice in early December, weeks before paper notices arrive. This is especially helpful for older adults who wish to plan their upcoming year's budget ahead of time. The online platform also helps you verify your direct deposit information to avoid delays in receiving payments. Similarly, veterans can use va.gov to manage their disability compensation, update personal information, and track claims. Using these tools makes it easier to stay informed and provides confidence that your benefits are being processed accurately. For seniors who may not be comfortable with technology, a trusted family member or caregiver can help set up the account so that important updates are never missed. Recent SSI program improvements. The Supplemental Security Income Program is undergoing gradual modernization designed to make it more accessible for low-income seniors and individuals with disabilities. Several important changes have been implemented to simplify the program. One of these updates involves expanding the definition of a public assistance household, allowing more people to qualify for SSI without facing unnecessary barriers. Another major improvement is the exclusion of food assistance from benefit calculations, preventing reductions based on informal or non-cash food support from family or friends. Additionally, rental subsidy exceptions are now extended nationwide. This change is particularly beneficial for seniors living with family members or renting in situations where the rent structure does not reflect typical market rates. These program reforms help ensure that people who genuinely need SSI support are not penalized by outdated rules. For individuals who may have applied for SSI in the past and been discouraged by complex regulations, now may be an appropriate time to revisit eligibility. The updates prioritize fairness and aim to better reflect the financial realities faced by older Americans. Over time, these changes will improve access to resources and potentially raise the number of eligible individuals receiving the support they deserve. How the COLA is calculated each year. Every year, the COLA is determined using the Consumer Price Index for urban wage earners and clerical workers, commonly known as the CPIW. This index measures price changes for essential goods and services, including housing, transportation, medical care, and food. The government compares prices from the third quarter of the previous year with the third quarter of the current year. Whatever percentage prices have risen becomes the COLA for the following year. The CPIW has been used since 1975 and was intended to preserve the value of Social Security benefits during periods of inflation. While the system works well for general economic patterns, critics argue that it does not accurately represent the spending habits of seniors who typically spend more on health care, a sector where costs rise faster than average inflation. Despite this ongoing debate, the CPIW remains the official formula under federal law. Over the past decade, COLA increases have averaged around 3.1%, with occasional large spikes during years of unusually high inflation. A more moderate increase, like the 2.8% adjustment for 2026, reflects cooling inflation, but also highlights ongoing financial pressure on seniors whose expenses continue to rise faster than the general economy. Protecting yourself from scams and fraud. Whenever updates to Social Security or VA payments are announced, scammers try to take advantage of confusion and fear among seniors. Understanding how to recognize fraud is essential to protecting yourself. Neither the Social Security Administration nor the Department of Veterans Affairs will ever call you unexpectedly to ask for your Social Security number, bank account details, or any form of payment. They do not charge fees to apply for benefits and will never demand money in the form of gift cards, wire transfers, or cryptocurrency. If someone contacts you claiming to be from Social Security or the VA and pressures you to act immediately, threatens your benefits, or requests personal information, hang up immediately. These are clear warning signs of a scam. Always verify communications through official phone numbers or online portals. If you believe your benefit amount is incorrect or if a scheduled payment does not arrive, contact the SSA or VA using their official contact numbers. In most cases, payment issues can be resolved quickly once the agency is aware of the situation. Staying informed and cautious helps ensure your benefits remain safe and secure. Why these increases matter for seniors and veterans. The annual COLA increase reflects the fundamental promise of Social Security, financial protection throughout retirement or disability. When you paid into Social Security during your working years, you contributed to a system designed to support you later in life. Without COLA adjustments, inflation would steadily erode the value of your monthly check. A payment that felt adequate 5 or 10 years ago could become insufficient today without these yearly increases. For veterans, the COLA adjustment recognizes the long-term effects of service-connected disabilities. Many veterans live with ongoing medical needs, chronic pain, or permanent limitations that impact their earning capacity. Increasing disability compensation ensures that financial support remains aligned with real-world costs. These updates also carry broader significance for families and caregivers. When seniors and disabled adults have more financial stability, their loved ones experience less pressure to fill financial gaps. The COLA creates more predictable budgets, reduces stress, and helps older Americans maintain independence for as long as possible. Preparing for the year ahead. With these updates coming into effect, now is the time to make sure your information is up to date. Check your direct deposit details, mailing address, and dependent information to ensure that your payments continue smoothly. If you have not yet created an online account with Social Security or the VA, consider doing so. It provides faster, safer access to your records and helps you stay informed about future changes. Remember that the COLA increases happen automatically. Whether you receive Social Security retirement, SSI, SSDI, or VA disability, your updated payment will appear without needing to apply or submit additional paperwork. You only need to take action if something in your personal situation changes, such as marriage, divorce, a dependent child, or a change in disability status. As 2026 approaches, these updates will provide real help for millions of Americans who rely on federal benefits. Although the increase may not solve every financial challenge, it offers meaningful relief and preserves the value of the benefits you have earned. Staying informed, staying protected, and staying prepared are the best ways to ensure you receive everything you deserve in the year ahead.